This is Misfortune Radio with New York Times best-selling author and your host, Doug Andrew.
Do you know that most people don't understand that a dollar doubling every period for 20 periods will grow to $1,048,000 if it's done tax-free? But if it's taxed as earned, which is the way most people save, and it's the worst way to save for your future. That's in CDs and money markets and bank accounts and so forth, in just a 25% tax bracket. And most people say that in the next 10 to 15 years, because of all of this debt we've painted ourselves into that I was talking about in the first segment, most people, even the average income American, middle income American in about 10 or 15 years is going to be paying close to 50% of their income in tax. Well, if you're in a 25% marginal bracket, which is anybody who, a single taxpayer making over $34,000 and a married couple filing a joint tax return making in excess of $68,000 this year. Every dollar over that amount, you give 25% of it to the federal government. And 41 out of 50 states has a state income tax between usually 5 and 9%. And so most people are in a 33% marginal bracket, which means that if you postpone or you defer tax, you're going to someday pay that back to the government. The government is expecting that. They're planning on that revenue. But if it's taxed as earned, in other words, your dollar doubles to $2 and then you pay tax on that gain, and then what you have left over doubles, and then that you pay tax on that gain every year. Instead of having $1 million, do you know you would only have $72,000 in a 25% bracket? You'd only have $27,000 instead of $1 million in a 33% bracket? Do you understand how important it is that you compound your money with the second miracle, tax-free, not just tax-deferred? Because if it's tax-deferred, that $1 million will be only worth $666,000 at the end of the day when you go to withdraw the money. If you withdraw $100,000 a year, you'll only net $66,000. If you withdraw $75,000 of interest income in retirement, you'll only net $50,000 because 1/3 or more will go out the window in income tax. The government is planning on that tax revenue.
This is Misfortune Radio with Doug Andrew.